Listen carefully, because what I'm about to tell you will challenge everything you believe about fast trading. The 1 minute chart is not your enemy. Your emotions are. Most traders step into the 1 minute time frame thinking it's about speed, quick profits, instant gratification. But what they don't realize is that the faster the chart, the faster their emotions take control. Fear becomes sharper, greed becomes louder, and hesitation becomes deadly. I've seen traders win 5 trades in a row only to lose everything on the sixth, not because the market changed, but because they did. They stopped following structure and started chasing feelings. And that is where destruction begins. Now understand this. The 1 minute chart is not random. It's simply a magnified version of the higher time frame. Every move you see, every breakout, every fake out is just a smaller reflection of a bigger story. But most traders ignore that story. They zoom into the 1 minute chart and trade blindly, without direction. That's like stepping into a battlefield without knowing where the enemy is. So here's the truth. The real 1 minute scalping strategy does not start on the 1 minute chart. It starts with clarity. Before you even think about entering a trade, you must know one thing: where is the market likely to go? Not where you hope it goes, not where you feel it goes, but where the structure tells you it's going. This is where discipline separates amateurs from professionals. You see, emotional traders react, but disciplined traders prepare. They wait, they observe, they let the market reveal its intentions, and only then do they act. Now here's the strategy. Step 1, direction. Before you touch the 1 minute chart, you identify the trend on a higher time frame, not to trade it, but to understand it. Because when you align yourself with the bigger picture, you eliminate half the noise instantly. Most losses happen because traders fight the trend. They try to catch reversals. They try to outsmart the market, and the market punishes them for it. So don't fight it, follow it. Step 2, patience. This is where most traders fail. They see movement and they jump in. No confirmation, no structure, just impulse. But the real edge comes from waiting, waiting for price to come to you, waiting for a clean setup, waiting for the moment when risk is small and probability is high. Because in scalping, you don't need many trades, you need precise trades. Step 3, the entry. Now we move to the 1 minute chart, but not to guess, to execute. You are not here to analyze anymore. You've already done that. Now you're here for one thing only: timing. You wait for price to pull back, you wait for it to hesitate, you wait for that moment where weak traders get shaken out. And then you enter, not aggressively, not emotionally, but decisively, because you already know why you're in the trade, and that changes everything. Step 4, risk control. Let me tell you something. Most traders ignore. Your entry doesn't matter if your risk is out of control. You can have the best strategy in the world, but if one loss wipes out 5 wins, you're finished. So keep it tight. Small stop. Clear invalidation. If the trade is wrong, get out. No hesitation. No hoping. No praying. Hope is not a strategy. Step 5, exit without emotion. This is where most traders lose their profits. They enter correctly. They manage risk well. But when the trade goes into profit, they hesitate. Maybe it'll go higher. Maybe I should hold. And just like that, profit turns into loss. So define your target before you enter. And when price reaches it, you take it. No greed, no second guessing. Because consistency is built on discipline, not luck. Now here's the final truth. The 1 minute scalping strategy is not about making fast money. It's about controlling yourself in a fast environment, because the market will always test you. It will test your patience, your discipline, your emotions, and most traders fail that test. Not because they lack knowledge, but because they lack control. So if you want to master the 1 minute chart, stop chasing trades. Start mastering your behavior. Because in the end, the market doesn't defeat you. You defeat yourself. Why 90% of traders lose the brutal truth. No one tells you they won't tell you this. Because if they did, most of you would quit trading today. But the truth doesn't care about your feelings. And the truth is simple. Most traders are not losing because of strategy. They're losing because of who they are when money is on the line. You see, trading looks easy from the outside. Charts, indicators, entries, exits, it all seems logical. But the moment real money enters the equation, logic disappears, emotion takes over, and everything changes. Fear makes you exit early. Greed makes you stay too long. Ego makes you refuse to accept losses. And slowly, without realizing it, you become your own worst enemy. Let me tell it. You something I learned the hard way. The market is not against you. It doesn't know you exist. It doesn't care about your trade, your stop loss, or your account. It simply moves based on forces far bigger than you. And yet, traders take every loss personally. They think the market is targeting them. They revenge trade. They overtrade. They double their risk, trying to win back what they lost. And that is the beginning of the end. Because once emotion takes control, discipline disappears. And without discipline, there is no edge. Now here's where it gets uncomfortable. Most traders don't want to admit this, but deep down, they're not trading to make money. They're trading for excitement, for validation, for the feeling of being right, and that's why they fail. Because trading is not about being right, it's about managing risk. You can be wrong 60% of the time and still make money, but only if your losses are small and your winners are controlled. But emotional traders do the opposite. They cut winners short and let losers run, because closing a loss feels painful, and holding it feels like hope, but hope is what destroys accounts. Now let's talk about discipline. Real discipline is not about forcing yourself to trade. It's about forcing yourself not to trade when there's no setup. That's the difference. Anyone can click buy or sell, but very few can sit still and do nothing, because doing nothing feels like missing out. And the fear of missing out is one of the most dangerous emotions in trading. It pushes you into bad trades, it makes you ignore your plan, and slowly, it turns your strategy into gambling. So what's the solution? It's not a new indicator, it's not a secret strategy. It's structure, rules, and the willingness to follow them no matter what. You define your setup, you define your risk, you define your exit, and then you execute without hesitation. No emotions, no improvisation, just discipline. Because in trading, consistency is everything. One good trade means nothing. One bad trade means nothing. But 100 disciplined trades, that's where the results come from. And that's why 90% fail. Because they don't think long term. They chase short term wins. They want quick money, instant success. But the market rewards patience, punishes impulsiveness, and exposes weakness. So if you're losing right now, don't look for a new strategy. Look in the mirror, because the problem might not be your system. It might be you. The perfect entry. 5-step formula most traders ignore. I used to believe that the secret to trading was finding the perfect entry, the exact moment, the precise candle, the flawless setup, but I was wrong. Because the perfect entry is not about perfection. It's about preparation. You see, most traders are obsessed with timing. They zoom into lower time frames, looking for the exact second to enter, but they ignore everything that comes before it. And that's why they fail, because entry is the final step, not the first. Let me show you the truth. Step 1, context. Before you think about entering a trade, you need to understand where you are. Is the market trending? Is it ranging? Is it volatile or quiet? Because without context, every entry is a guess, and guessing is not trading, it's gambling. Step 2, direction. Now that you understand the environment, you define your bias, not based on emotion, but based on structure. Higher highs, higher lows, that's strength. Lower highs, lower lows, that's weakness. Simple, no indicators needed. Because price is the only truth. Step 3, location. This is where precision begins. You don't enter anywhere. You wait for price to reach a meaningful level. Support, resistance, liquidity zones, places where decisions are made. Because the best trades come from the best locations, not from random entries. Step 4, confirmation. Now we move closer to the entry. You wait for the market to prove you right, not the other way around. You don't predict, you react. You let price show strength or weakness, and only then do you prepare to enter. Because confirmation reduces uncertainty. And in trading, reducing uncertainty is everything. Step 5, execution. This is the moment. But here's the difference. You're not guessing anymore. You've done the work. You understand the context. You have direction. You have location. You have confirmation. Now, you simply act. Clean, decisive, controlled. And that is what creates consistency. Because the perfect entry is not about being lucky. It's about stacking probabilities. And when you do that, something powerful happens. You stop chasing trades. You stop forcing setups. You stop trading emotionally. Because now you have a process. And process creates confidence. Not fake confidence, but real confidence built on structure and discipline. So the next time you look at a chart, don't ask, where should I enter? Ask, have I earned the right to enter? Because in this game, entries are not given, they are deserved, and only those who follow the process get rewarded. The silent killer in trading, why you keep losing without knowing, listen carefully, because this is not about strategy, it's not about indicators, and it's definitely not about the market. It's about something far more dangerous, something most traders never even realize exists. And by the time they do, it's already too late. There is a silent killer in trading. It doesn't show up on charts. It doesn't give warnings. And it doesn't care how smart you are. It lives inside you. And it grows every time you ignore it. At first, it's small, almost invisible. You take one trade, it goes against you, but instead of accepting the loss, you hesitate. Maybe it'll come back just a little more time, and in that moment, you've already lost control. Not of the trade, but of yourself. Because trading is not about predicting the market. It's about controlling your behavior when the market doesn't do what you expect. And that's where most traders fail. Not instantly, but slowly, quietly. Trade after trade, mistake after mistake, until one day they look at their account and realize it's gone. Not because of one big loss, but because of 100 small decisions made under emotion. You see, the market doesn't destroy traders. Traders destroy themselves through hesitation, through overconfidence, through fear. Let me tell you something uncomfortable. You don't lose money when the trade goes wrong. You lose money when you refuse to accept that it's wrong. That's the difference. Professional traders are not always right, but they are always disciplined. They know when they're wrong, and they act immediately. No hesitation, no emotional attachment. Because to them, a loss is not failure. It's part of the business. But to emotional traders, a loss feels personal. It feels like defeat. And so, they avoid it. They move stop losses. They hold losing trades. They double their positions, trying to prove themselves right. But the market doesn't reward ego. It punishes it. Every single time. Now here's where it gets even more dangerous, because the silent killer doesn't just appear in losses, it appears in wins too. You take a good trade, it hits profit, and suddenly, you feel invincible. You increase your lot size. You take trades without confirmation. You stop following your rules, because now, you trust your instincts. But what you're really doing is feeding your ego, and the market has a way of humbling people like that. Fast. One bad trade, then another, and just like that, everything you gained is gone because you stopped respecting the process. You see, consistency in trading does not come from winning. It comes from control. Control over your entries, control over your risk, control over your emotions. Because without control, even the best strategy will fail. Now ask yourself this, do you have rules? Or do you just have ideas? Because there's a difference. Ideas are flexible. They change based on how you feel. Rules do not. Rules are followed even when you don't want to follow them, especially when you don't want to follow them. That's what makes them powerful. Because in trading, your worst decisions will always come from your emotions. So your rules must protect you from yourself, not from the market, from yourself. That means defining everything in advance, your entry, your stop loss, your take profit. And once the trade is placed, you don't interfere. You don't adjust based on fear. You don't close early based on doubt. You let the trade play out exactly as planned. Because the moment you interfere, you break consistency. And without consistency, there is no edge. Now understand this clearly. You don't need to win every trade. You don't need to catch every move. You don't need to be perfect. What you need is discipline, the ability to do the same thing over and over again without letting emotion interfere. That's it. That's the difference between those who make money and those who keep losing. It's not intelligence. It's not talent. It's control. So if you feel stuck right now, if you feel like no strategy is working, if you feel like the market is against you, stop and look deeper. Because the real problem might not be your system, it might be your behavior. The silent killer might already be in control. But here's the good news. Once you see it, you can stop it. Not by changing your strategy, but by changing your discipline, by accepting losses quickly, by following rules strictly, by removing emotion completely. Because in the end, trading is not about beating the market. It's about mastering yourself. And those who do that don't just survive, they win, quietly, consistently, relentlessly, while everyone else keeps wondering what they're doing wrong.